Hi everyone. So by now you're likely well aware of, the SVB situation that's been going on, the collapse of this bank, and how it's sending shockwaves throughout the markets. But the question I want to answer in this video is all of this justified? Is the market overreacting? Is there really risk to other stocks out there? More specifically, I hold tech stocks personally, primarily in my portfolio. So the question I want to answer is, are tech stocks affected by this SVB collapse? I think the answer is yes. And I'm going to explain why with some facts and some details in this video. So SVB is a bank, Silicon Valley Bank, and the fear with them collapsing here is that this may not just be an individual case. The fear is that this could actually spread to other banks, affect the whole financial industry, which will affect the markets and, every investment out there. Investors are still trying to figure out if this was kind of like a unique case and if there are other regional banks out there that could be exposed to this risk. Now, the good news with all of this is that it's very unlikely that the largest banks, like JP Morgan Chase, Bank of America, Citibank, it's unlikely those banks are going to be affected by this. If anything, they may actually benefit from all this with new influx of deposits. But that doesn't mean we're in the all clear because, outside of these large banks, there are many other regional banks that could fail and that could hurt the economy bigly. Now, it's important to understand SVB, what the company does, who they serve, and why this became such a big issue, right? So the name kind of gives it away. This is a Silicon Valley bank, and they mainly focus on helping startups by providing them with banking needs. Their mission is to serve innovation companies. In other words, ARK made this word famous, innovation. They're essentially funding money-losing businesses. So there's two issues that I see here, right? The first is that they have high concentration in one sector, tech specifically, and startup companies. The second is that they focus on innovation, and innovation can pretty much just be, you can reword that as just money-losing businesses. So they're in higher risk companies that typically don't have enough money to keep operating. They have money in the bank that they keep using to fund their operations for, but they're not free cash flow positive. They're not like your large tech companies out there. And of course, for all of us that have been paying attention to the market in 2022, we know that growth stocks, these innovation companies got absolutely crushed last year. So their cash balances is more important now than ever before. So this is kind of the crux of it. And this is kind of what I want to talk about in today's video, because there are some tech companies that may be small and irrelevant, but there are also some very large companies or companies that you and I may be holding in our investment portfolios that could feel some pain from this collapse. So what I think we'll start off with here is just kind of looking through some companies that have actually gone ahead and proactively filed an 8K disclosing their relationship with SVB. Here's a list I came across on Twitter. Very likely this is going to grow much larger in the coming days as more companies come out and say that they were exposed and they file 8Ks and such. And some notable names on here: companies like Roku, who has something like a quarter of their cash with SVB. You have other popular names like Ginkgo Bioworks, Rocket Lab, Lending Club, QuantumScape. A lot of companies here that are super popular in the retail space, but are huge money-losing businesses. Bill.com was another name that has something like $600 million worth of exposure, kind of with a mix of like their customers' money and their own money. So another big risk here for this company. And the list doesn't really stop there, because there are some slightly larger companies, more better known companies that also could be exposed, that have come out with some statements but haven't fully disclosed the amounts that they're exposed by. Companies like Airbnb, Unity, Roblox, even Datadog, ZoomInfo are suspected to have some exposure here. So this is starting to spread, across the whole tech industry with a lot of popular tech names. But now here's kind of where it gets even more concerning. So right now we've been looking at like some smaller companies in the tech space, but there are some larger ones that also have exposure. CrowdStrike is a company that SVB lists on their website as one of their clients. Big cybersecurity name, one of the most popular cybersecurity names. ZipRecruiter, a stock that I owned in the past. Teladoc, another popular stock with retail and with ARK. Shopify, huge retail e-com name. It's on the list here. Tableau, this is owned by Salesforce, another one of my holdings, again listed as a client. So we can see that this is spreading quite widely across the whole tech sector. It's not just concentrated on startups like some of us may have thought initially. And it's probably why we're seeing a lot of tech stocks also sell off here while financials sell off. Investors just don't know the extent of this. They don't know what companies have a high amount of exposure to SVB versus a small amount. So all companies that could potentially be on this list are just getting whacked. So now this is just one side of the coin, right? These are customers that have money with SVB. What about companies that sell products and services to this bank, right? This is one of the largest banks in America, I believe. It's in the top 20, so it's quite large. You know, tons and tons of assets, tons of employees, so they use services out there. So it kind of got me thinking, okay, what other companies could be affected, especially ones that I follow and own? From a job posting I came across in the past, it looks like ServiceNow is a product that SVB uses, and could explain why ServiceNow stock dropped quite significantly on Friday, worse than other tech stocks. Workday, another name affected, because when I look at their careers page on SVP, I can see that it's hosted through Workday, and they also clearly look for roles that have Workday experience. So this is definitely a company that they have some relationship with. And guys, this is just the tip of the iceberg, right? This is me spending a few minutes looking through their website to see what I can find in terms of potential services or seats that they purchase from their customers. It's likely that they use some sort of CRM software, most likely Salesforce. So that's another one that could see more pressure here and could lose seats and revenue. And again, if we go back to our previous point, right, if this spreads to other banks and other banks see similar outcomes where they have to shut down, that's going to affect a lot of these tech stocks, because if they recognize revenues from these companies, even though it's SaaS predictable revenue, that revenue stream could go to zero overnight, and it's just kind of a lost customer in that situation. So there's a lot of trickle down effects we must pay attention to here. I'll admit, initially, I was kind of like, I don't know how big this can be. This may be something the market's overblowing. But now as we see more and more details come out, we see how important SVB was, and the fact that it was pretty much a bank focused in the tech space, things could get a lot worse. Now, I'm not here to spread fear. I'm just sharing facts with you guys. And one thing that could happen over this weekend is we could have a major bank, like the ones we talk about, JP Morgan Chase, Citibank, maybe even Wells Fargo, come out and actually bail out this company, purchase this company, and that could help the whole system recover here. Maybe we have another large firm that has tens of billions or hundreds of billions of dollars sitting in cash, Berkshire, that could come in and bail this out as well. Again, get a really good deal on this, and it's kind of their specialty after the 2008 financial crisis, where they were seen as the heroes in some aspects. So there is still possibility that things could be contained and could get better from here, but we'll have to wait and see this coming week how things actually shake out. All I can say is right now it's looking like the contagion is actually real. Things are actually spreading, and I'm being cautious in this environment. I'm not jumping into any positions yet, because if things get worse, it could get a lot worse. But if things get better, we could see some sort of recovery here. The market already has so much that it has to deal with interest rate hikes, with inflation, with just a lot of pressures out there with the economy slowing. This is just kind of a cherry on top that could be the next domino to drive the next sell-off. We'll have to wait and see. Still too early to tell, but with the VIX spiking, fear is definitely back in the market. Anyways, guys, I'll keep you posted on any updates here. If you're interested, let me know in the comments down below. Also, share with me in the comments down below, are you exposed to any of the companies here like Bill.com or Roku or any of the other ones we talked about that were customers of SVB or that have SVB as their customer? Love to hear your thoughts in the comments down below. But either way, guys, thank you so much for watching. Don't forget to invest positively, and I'll see you in the next one. Peace.